are the commodities that we are tracking today. Thanks, Ravinder, for taking us through that. But moving on, let's shift focus back to gold prices then. Now, back home, the gold prices, of course, are volatile, but back home, gold prices crossed 1 lakh per 10 grams, rising 2.5 lakh per kilo in just 5 sessions. Now, globally, bullion hovers around that 3,390 per ounce level. That was driven by a mix of tariff, uncertainty, geopolitical risk, and policy shifts, as we have been talking about. But what does the road look like ahead? To discuss that, we're now joined by Sachin Jain, who's the Regional CEO India of World Gold Council. Hi Sachin, good afternoon. Thank you so much for joining us today. Now, if you could help us understand, what are you making of the price trends here for gold globally? It has been volatile, but back home on MCX, we did cross that 1 lakh level yesterday. What are you making of the prices, and what's the expectation for the rest of the year?
So first and foremost, a big thanks to for getting us as World Gold Council on your platform. Really grateful for that. And as you said, it's been quite a volatile journey for gold in the first half of the year. In the first half of the year, the gold grew by 26%, which is historic. We saw 32 peaks, historical peaks of gold prices in the first half. And again, as you were mentioning in your initial conversation, this has been all based on geopolitical reasons, central banks buying, and a heightened interest of the financial investors in the base metal. And I think when you look at, that's been the first half. When you look at the second half of the year, there could be possibly 3 scenarios, and we sit at a sort of a seesaw because a lot of the indications of what could happen are kind of absorbed in this pricing. Now, we believe that there could be 3 scenarios, and firstly, the base case is that if things go the way they are and things settle down, it's a more calmer world, and so on and so forth, then we believe that the increase could be as steady as 0 to 5% from here on. If it's a very, very volatile world and things go very bullish in the sort of favor of gold, then this could lead to a appreciation of between 10 to 12%. And if it's really a bear run that everything settles up, all the trade issues are sorted, which seems a very bleak scenario, then the gold prices could be 10 to 12% down. So between these 3, we think that the base case could be perhaps more indicative. And I think it's going to be a very important sort of second half of the year. And again, with very heightened interest of financial investors. I mean, just to reflect on the ETF side of it, globally, the whole AUM sits now on 397 tons, which is historically been the highest. From an Indian perspective, we started the year with about 58 tons. As on the last report that came in June, we were almost at about 68 tons. So it's been a phenomenal growth from the base of that level.
All right. So those are the 3 scenarios that you've pointed out. Let's see which one plays out, and we'll see where gold prices go from here then. But now, talking about demand against the prices that we have currently, what is your expectation with respect to demand in India, given that the festive season and the wedding season is just around the corner?
See, let's break up the Indian demand to 3 or 4 areas. The first and foremost and the most obvious is that the demand for jewelry in our country. And historically, we've seen that India consumes a certain level of gold, which hovers around 800 tons. And it's been the similar level of consumption, even at 1/5 the prices to right now. And the fact is that every time we've seen, historically, whenever the prices go up, the consumer for jewelry waits and watches and then comes back to the floors once there's sort of adjustment to saying that this is the new price. Unfortunately or fortunately, in the first 2 quarters of the year, the prices kept going up and up. And now over the last few weeks, we see some stability. And there is, parallelly in the first 2 quarters, we saw a bit of drop in the demand, which certainly is a fact because drop in the demand in terms of volume, but not necessarily in the value of gold. So consumers have come out and bought more value. And actually, that's truly the fact of how much disposable income consumers have in their hands. So that's been positive. But we believe that in this coming quarter, which is the onset of the festive season and a stability of the gold price, the consumers will come back. In parallel, we've done some consumer surveys, and the consumer right now for jewelry side is quite obsessed with gold. People are waiting on the fence and watching it. And we believe that the next 2 quarters should be quite positive.
All right, so the next 2 quarters could be quite positive. But Sachin, as you were just pointing out, the demand for jewelry that has been relatively muted. But people are looking into the value of gold, and investment demand for gold in India has been quite positive. So, what role do you think digital gold, gold ETFs, and SGBs, how are they playing a part over here?
I think it's a reflection of of the new India that we live in. It's a reflection of a digital India we live in, and products like ETF are phenomenal products. And I think at this stage, just the financial community is kind of aware what these products are. But when you talk to an avid Indian who's walking the street, the awareness is still very low and quite poor. And I think at this ETF in particular is at the crux to become a very important, significant growth driver for the coming years. It's a regulated product. The fact that every time you buy an ETF, it's physically backed by gold. I think these are things that not every Indian is aware of. And I think as I see the median age of India becoming 29, more and more access to digitized India, I think these products of digital gold, these products like ETF, which are regularized, will form a very important area of investment for the future consumer.
All right. Thank you so much, Sachin. Like you said, ETF, is on the cusp of becoming a very significant growth driver for investment in India. But thank you so much for joining us this afternoon. And on that note, we'll let you go. Thank